Ken, how we doing today?
Boy, all is good. We get to talk about a topic today that, man, it hopefully will help relieve some of the panic in the streets that people may be feeling.
All right, we're talking about the lock and shop program. So lenders are getting creative, trying to find ways to help the consumer hedge against the massive rise in interest rates. We have a lot of people building new homes right now, and we have a lot of people that are making multiple offers. So it's taking a little bit longer to get a property under contract. So this program, it was popular in the past, hasn't been very popular in the last 5 years until right now. Tell me a little bit about the lock and shop program. What do we need to know?
All right, so cool part of this is that you can actually lock in your interest rate now for up to a 6-month period of time. So you can secure an interest rate, go look for a property, and as long as you close within that time frame, you are protected against rates exceeding a certain threshold. All that sounds great, right? Yep. So there is a little bit of a catch to that, to lock it for 60 days while you're shopping, that's not a very long period of time, but lenders are going to require a slightly higher rate than if you had a property identified now. And then that rate gradually goes up for every 30-day increment that you want to extend it out to that 180-day time frame.
Okay, so no property. This could be on a property under contract, like a new build, or no?
Yeah, no, you could do a new construction.
Okay, so
yes.
You can have an address or not have an address.
Or not have an address, yes.
Awesome. So let's stick with like the existing home for a second. The people who don't have, they're not under contract.
That's why this has come out, right? So
yeah,
we get into the good and maybe what we need to consider. The only frustrating part from your and our side, Kirk, is that, man, where were these extended time frames? So there was a lock and shop program, but it only got you about 60 days before. And now the lenders have said, oh my gosh, we've got to do something to help ease people's anxiety. So the only thing bad about this program,
or nobody's ever going to buy a home.
I know, is that the only bad thing is it didn't start 4 or 5 months ago.
Okay, I get it. Fair. So there's a slight rate increase to protect yourself. Makes sense. Longer it goes out, the more the rate goes up. Float down to lower rate prior to closing.
That's the cool thing, right? So we've got our upside covered, meaning that your worst case scenario is baked into the cake. But hey, what happens if tomorrow inflation all of a sudden becomes controlled and mortgage rates improve? You still have the ability to relock at current market rates when you know when your close date's going to be.
That's huge.
It's a win-win.
Makes sense.
Mm-hmm.
So for those of you on that fence of qualifying for that price range that you're looking for, it's going to lock in your principal and interest payment, which will help if they do go up further. It won't push you out of your qualification zone and put you on the streets. So that's a big positive there. Float down, that's huge. Deposit. Are they taking upfront money to secure this rate?
So, we're old enough that we remember back a few years ago, if you wanted to do a new construction rate lock, and you wanted to lock in your rate for 6 months, you had to give a 1% of the loan amount deposit. That doesn't exist right now. So that's a bonus. There really isn't any bad side to the consumer. Like, why would you not do this?
Well, you have to apply for the loan anyways.
Okay, there's the one thing. Yeah, it's like that's kind of a big thing. Yeah. Oh, I don't really want to do that right now. That's the catch.
All right, so that's not a big deal in this day and age. Just about everybody has their documents digital in some fashion, and they can upload them or email them or whatever they want to do. So not the end of the world. But all right, so you can protect against your worst case. Keep your qualification in order. You get to take advantage of lower rates if they're there. There's no deposit needed. 60
only-
days. Sorry, go
Yeah,
ahead.
the only thing we didn't cover is what happens if you go beyond that time frame that you say you want to lock in for. Let's say, example, I'm good for 120 days. I'm going to find a house. So at the end of that time frame, you have the ability to purchase extended lot coverage, or you go to current market rates. So not the end of the world. You can extend it a little bit. It does get a little bit more expensive, but you have options there. Most lenders say that you're supposed to have a property identified within 30 days of the end of that expiration. So if you had a 120-day lock, you got to have a house identified on day 91 or 92.
So my brain is thinking about all the consumers that you're speaking with right now, and the majority of them aren't ready to enter the battle per se of starting to put offers in. This is for folks who have confirmed with you that we're indeed ready to proceed and get serious about putting offers in. These are the folks taking the lock and shop.
Yes.
Not somebody just trying to figure out, what payments look like and how does the process work and I'm gathering information for a first time.
I'm sure there are lenders out there that are trying to encourage them wherever they're at mentally to take advantage of this so that rates don't go up. There's some concern for the consumer, but it's more of the lenders trying to get their hooks into the customer and keep them from going anywhere else. So you're spot on.
Real estate agents watching, this is huge, guys. This is a big deal where your customers need to understand that this is out there to relieve some of the pressure that they're feeling in this environment right now. This is like no other that we've ever seen. I was asking you about that this morning. 2011, 11 years ago, we saw something similar where so many homes were upside down that folks couldn't purchase or refi. This is similar here where interest rates have, tell me where we're at. Give everybody an idea of where we stand.
Yeah, good question. So right now, we just looked at it. A 30-year fixed rate was 0 points on a loan amount we'll call it 275 to 300. Without paying any lender fees or buying the rate down, rates are at 5.5.
There we have it.
It was early January. We were in the very low threes, if not right at 3%. So we've had 2.5% in 3.5 months, and it's just wreaking havoc.
It will cool demand. It's just going to take time. It will work. It's happening as we speak. Hard to see it when you're right in the middle of it, but yes, it is happening. This lock and shop program is awesome. We're using it quite a bit right now. Anything else?
Let me just give some context or some ideas of the extended time frame and what it means to the rate. Okay. So, normally if you have a transaction, you're closing within 30 days. So if you wanted to get an extended lock out 60 days, that's going to be 1/8% more than what you could get today. 90 days, you're going to pay 3/8% more. 120-day lock, it's about 0.5% more. 150-day lock, we've got 5/8 that would be added. So if we're at 5 today, if you wanted to lock for 150 days, your ceiling rate would be 5.625. And then that 6-month coverage, if we're at 5 today, it would be 5.75 or 0.75%.
And you get to float down if rates are better.
You get to float down. Yep.
And you don't have to put any money up front to secure it.
It's insurance.
Well, you have to put in the sweat equity to get your loan application commit done into us and all that fun stuff.
Yeah, the hardest part is just figuring out how long you want to try to secure that rate, where you're flipping a coin to find out when the home's going to come on the market that suits your needs. That's easier said than done, but yeah,
that's nothing. No problem. All right, awesome information. Thank you so much for sharing. Guys, reach out to us with questions. Again, this is huge. Those of you entering into the market that are now getting serious, you got to take advantage of this, get some protection. We'll help you walk through it. Ken, great job. Thanks.
Ditto. All right. See you
right.
guys.
Bye.